Spot price sell-offs in the global gold market continued this week. Before we dig into short-term minutia about what may happen with gold and silver in the short run, I want to go through a few verifiable fundamental facts that are destined to drive this global gold bullion market into a mania phase valuation melt-up for the history books. Gold's recent decline has been largely attributed to the relative strengthening of the fiat US dollar versus other major fiat currencies, recent outflows of capital from unsecured gold ETFs, and a decrease in net managed money long positions on the COMEX Gold Futures Exchange. Now, this trend reflects a likely unwinding of pre-election hedges, concerned about the potential for election result chaos. You can see here in COMEX Gold Futures report, hedge funds or managed fiat currency accounts cut and ran en masse upon Trump's sound victory, hence the weakness in gold recently. Of course, the world's second largest physical gold buying market took the other side of the long-term trade here. Indians have been buying this recent post-Trump election gold price dip. And shortly, we're going to look at recent trends that suggest Indians are due to become even larger four-man gold gorillas. The speed of communication on the internet and the underlying market fundamentals basically guarantee a global lizard brain bullion buying frenzy to come. And silver will be the later of the two that goes manic. Back to the West, where in Europe this week, the Hungarian Central Bank published this image on Facebook celebrating their latest additions to their growing sovereign gold bullion reserve pile. That right there is 20 tons of their gold reserves, naked for the photo opportunity. Each bar is worth over $1 million fiat US dollars at the moment. A ton is about 80 400-ounce gold bars stacked on wood pallets and or filed away in gray containers on the walls. The Eastern European nation has reported having 90 more tons of gold not photographed, as the exposed 20 tons are here. Poland's central bank did similar, releasing their 2023 annual report yesterday, citing their intention to continue increasing their gold reserves, which currently stand at 427 tons, with intentions of buying towards 600 tons, and a 20% allocation of gold bullion in their sovereign capital account to come. The U.S. national debt just hit $36 trillion. But we're about to sober up with what unfunded liabilities we in the USA and most of the Western world have not saved for and are not going to be able to pay off in real terms. Estimates are that when we add up the net present promise piles in the USA, we're currently looking at a bill spanning from estimates of $220 trillion to the U.S. Treasury Department's recent unfunded liability estimation sum of $175.3 trillion over their infinite horizon. The European Union is in a similar quagmire, more promises coming due than they can collectively keep. A future manic gold price around the world will confirm these ridiculous promise piles coming undone. Meanwhile, the new Trump administration pledged this week to establish a Department of Government Efficiency headed by successful entrepreneurs Elon Musk and Vivek Ramaswamy. Musk has publicly suggested his hope of cutting upwards of $2 trillion from the annual government expenditures in the United States. Musk even got his Doge joke in on the act, and fanboys had a field day memeing in on the news. But let's look at some ongoing facts. Last fiscal year, which closed in September 2024, the U.S. government ran a reported $1.83 trillion deficit. Projections by the U.S. government conservatively suggest these deficits will only grow for decades coming. For last month alone, October 2024, the deficit was $257 billion. The United States' government spending is projected to be around 37.5% of our annual GDP. So, good luck. And sure, call me cynical, staring at the fundamental facts of our culture at the moment. But before we go and get into legit government afuera phase, which is ongoing in Javier Milei's Argentina, we're going to have to brave through current fiat financialized market bubble crashes and an eventual store of value crisis, the likes of which the United States and the Western world have not seen for generations. Gold fundamentals, currently compared relative to the past gold bull market tops, is nowhere near where it's going. The current red line is still far from an eventual price wall climb to come. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates, and be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Make some room in your safe because a whole lot of silver could be coming your way. SD Bullion's Monster Box Sweepstakes is back, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a monster box for the first time ever. This stunning silver coin is a highly detailed masterpiece featuring a hidden inscription on one of the tree branches that changes every year. So put on your best flannel and become one with the forest, and take your shot to win 500 silver trees from SD Bullion, because someone's gonna win it, so why not you? Click the link below for your chance to win.
The spot silver and gold market sold off again this week, with spot silver finishing the week at $30.22 an ounce bid, while the spot gold price closed at $2,561 an ounce bid. The spot gold-silver ratio fell one tick to 84 on the week. Short-term RSI data suggests gold is likely oversold and in for a bounce perhaps next week. Currently, it is now right near its 100-day moving average. I'm left wondering if it has a further dip to come, perhaps lower toward the 200-day moving average. It's possible, for even in gold bullion bull markets, it happens from time to time. This chart you see right here is the full fiat currency era, and the bottom half of the chart is the 200-day moving average relative to gold throughout the last 55 years. On the silver side of these moving average charts, we are seeing similar stuff with spot near the 100-day moving average at the moment, and this is the 200-day moving average over the full fiat currency era. Look back to silver's two runs in the 1970s relative to its 200-day moving average, for they have similar shapes as to where we are now. A fiat price volatility will inevitably get wilder as time proceeds in silver. Just about 6 days ago, back near 2,700 an ounce gold spot, analyst Max Layton of Citigroup went on CNBC India to make the case for buying this current dip for both gold and silver. Have a listen to what he had to say over the medium term.
I want to start with gold first, and we've seen an all-time high into this one. How do you see the prices going forward, and what is Citi's target for the next 6 to 12 months when it comes to gold?
Gold's had a spectacular run this year, of course, up around 35%. There's been many different drivers, and I would say the different drivers not the normal historical drivers over the last 10 to 15 years. You've had central banks really step up. You've had China really step up, certainly for the first half of the year. And that's transitioned into North American, European, global ETF buying in the third quarter of this year. China stepping back. On paper, the central bank stepping back a little bit. But overall, investment demand for gold this year has been super strong. It's come from different sectors, as I mentioned, over time. It's shifted over the last 9 months, exactly who's buying how much. But wow, it's been a spectacular year for gold investment demand so far, and we expect that to continue over the next 6 to 12 months.
So Max, when you say that you're expecting the prices to go higher for the next 6 to 12 months, what's your sense on prices? What are your targets?
Yeah, I mean, overall, considering some of the data that's gone against gold, strong payrolls, big rally in rates over the last few months, it's been a very steady, positive momentum bull market in gold. And we haven't changed our forecast for some time. We've been targeting $3,000. Well, I think at least since the start of this year, potentially since the end of last year. And that is where we expect to be over the next 6 months. And we're expecting it to, of course, there could be volatility on the way up, but target remains $3,000 an ounce.
Max, also, how would you look at the silver prices? Because this one has outperformed gold. There is a deficit and there's a bull run into here as well. How would you look at the silver prices in 2025?
Yeah, so when we ran the balance numbers for 2025, for example, we assumed $40 silver. And then we adjusted the jewelry demand lower in response to higher price, adjusted the scrap supply higher in response to higher price, and we still come out with a deficit. So even at $40, we are thinking that $37, $38, $40, in that kind of range, we're still seeing that the silver fundamentals require investors to sell their stocks to clear the market. And that, that underpins our bullish view on silver, and we're targeting over the next six to 12 months, $40 an ounce.
Metals Focus and the Silver Institute reported this week the ongoing global silver supply deficits continue, estimating the figure to be near negative 282 million ounce shortfall this year between exploding silver industrial demand and net unsecured silver ETF demand on the year. This is the fifth consecutive year of total world silver demand outstripping above ground mining and recycling supplies. That trend will continue into coming spot price escalations. Elon Musk tweeted another bold claim this week, saying solar power will be the majority power generation of the future. Of course, no word on where we'll get the silver and or the timeline on said claim. This is a good graphic that shows you just how much has changed in the global silver market, aside from the spot price doubling over the last decade, and the growing high-tech and green industry demand is exploding for silver. Net investment demand is still relatively low compared to a decade ago. Most investor normies remain asleep at the wheel on silver. But not forward-looking Indians at the moment. This recent video caught my eye this week. It forewarns the coming mania of future investment demand for silver to come, in that silver is still spat on by most people who look at this market. But its explosive combination of cutting-edge industrial demand and store value case to come, the internet is going to ensure that that story grows in the years ahead.
So as you know, Dhanteras is celebrated on the 13th day of Krishna Paksha in the month of Kartik, which marks the beginning of Diwali. In fact, Dhan means wealth, Teras means the 13th day, and Hindus all around the world observe it by purchasing precious metals, especially gold, to usher in good fortune in their lives. So the unusual thing that happened is that for the first time ever, the demand for silver during Dhanteras was more than that of gold. So figure this, while the sales of gold were about 15% lower than last year, the demand for silver surged by 35%, which had never been seen before. Of course, the 28% rise in gold prices did play its part in dampening the mood, but when we account for the fact that the price of silver has risen by an even higher 36% in the past 1 year, one can't help wonder why there's a sudden interest in a metal that's often described as poor man's gold. Honestly, while researching for this video, I struggled to find a single pessimistic report on silver, and there are people like Keith Neumeyer who are saying silver might even reach $100 an ounce, even higher. But if you don't want to get that far, there's also a report by Motilal Oswal Financial Services that's predicting the price of silver to rise by another 28% by the end of 2025. And therefore, in this video, I'll give you the complete lowdown on silver, covering its various uses, the benefits of silver, what drives its value. A quick comparison with gold, including the gold-silver ratio. Is now the right time to invest in silver, which I'll say is the most important section. How to invest in it, how has silver performed as an asset class, and much more. Let's begin.
That will be all for our weekly SD Bullion Market update. And as always, to you out there, take great care of yourselves, those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.